What we know is a drop. What we don't know is the ocean.
Hello, and welcome to the Newton Knowledge Podcast. My name is Mark Singer, partner of Newton One Advisors, and I'm joined by our managing partner, Steve Target. The Newton Knowledge Podcast will provide meaningful content to our valued advisor community. Our discussions will deliver unique insights into the people, processes, and products that make our industry so critical. Newton One is a national life insurance planning firm delivering customized solutions structured to help clients and their advisors engaged in solving estate planning, wealth transfer, business succession, and executive benefits challenges. We are a member of the M Financial Group, which grants our clients access to the nation's elite carriers and exclusive products available only through our network. Today, we have the privilege of speaking with two M Financial partners we work very closely with in the executive disability insurance marketplace. First being Tami Barraclough, Director of Disability Insurance, head of their division, and then Courtney Russell, Senior Sales Support Specialist. Before we dive into our questions, Tami, tell us a little bit about yourself, what you do day to day for M Financial, and how you got to where you are today.
Yeah, thank you for having us. Quite an honor. So I lead the disability insurance business area for M Financial. I'm responsible for the growth of that business, and I manage our DI carrier partnerships and the sales support that we offer to our M firms in the community. I've been in the industry for over 30 years now, all in the disability insurance space. I was a case designer back in 1991 when M Financial decided that it was time that they offered support and focus in the disability insurance space. Our team is, we really serve as an advocate for our M firm community, offering them support with their clients for disability insurance in whatever capacity they need. We consult on existing programs and make recommendations for their programs and really serve as an extension of our member firm offices, to help communicate the need of this important coverage.
Thanks, Tami. Courtney, do you want to run through your career as well?
Sure, yeah. So I'm part of the disability insurance team here at M, and also along with Tami, support our member firms navigate the disability insurance market, place business, and help with all disability insurance sales support related activities. So I've been in the industry for almost 14 years. Before M Financial Group, I was with a very large disability insurance carrier. So been in the industry for over a decade, and happy to help our firms and others learn more about disability insurance, and it's been a very important need. So
thank you both for being on today. For those who hear me speak on this topic, it's almost all of the time. I sound like a broken record, but I rely heavily upon both of you and your expertise in this field, as well as structuring certain plans and figuring out certain contractual features that may be of importance to the client, or ways we can provide savings or different funding mechanisms. So I can't stress enough how much you have helped myself in my practice, and that kind of transcends to the clientele we work with as well. So thank you both for being part of this discussion. It only makes sense to have you both involved when we talk about disability insurance for our clients. So to kick it off from the highest perspective, if you will, from a very high level approach, when we're talking about for this discussion, executive disability insurance. And Tami, this question is going to be directed towards you first. How would you articulate it to an audience?
Well, do you mind if I start back with what disability insurance is?
I don't. You can start wherever you want.
Okay, great. So disability insurance is income protection coverage. It's individual insurance that pays a benefit if someone is too sick or hurt to go to work and earn an income. And what we're really concerned about is what happens long term. If that period of disability was to last long term, 3 months, 6 months, or even longer, how would someone continue to pay their expenses, save for retirement? So it's really one of the most important financial planning aspects that you can consider. It offers peace of mind, kind of a safety net, if someone is too sick and can't work. You should consider replacing about 60 to 65% of your income on a tax-free basis. That would give us enough to pay for normal expenses. We wouldn't have to change our lifestyle too much. And disability happens more often than we think. Disability is 4 times more likely to occur during our working years than a premature death during our working years. We have life insurance, we have car insurance, we have mortgage insurance, we even have coverage for our iPhones. Oftentimes we don't think about income protection, so insuring that income. And it's typically because policies are expensive. They require medical and financial underwriting, and that means tax returns, medical history. And employees look to their employers to provide disability insurance coverage. DI coverage through an employer it's easy to obtain, it's guaranteed issue, it's inexpensive for the employer, but it doesn't always provide enough income protection to get to that 60 or 65% level. So what we recommend is supplemental coverage, buying additional coverage, buying an individual disability policy to supplement that group coverage. But when you purchase it on your own, it's difficult to obtain. It's expensive. And so we recommend buying that coverage through employer sponsorship. It's much more cost effective. There's guaranteed issues, so not having to worry about medical and financial underwriting. So back to your original question, what's an executive disability plan? It's really individual coverage purchased with employer sponsorship to gain access to the advantages of it being cost effective. You're allowed multi-life discounts, gender neutral rates, guaranteed issue, so no medical underwriting, no tax returns. It's just a more efficient way to buy that coverage. The employee needs that coverage if the group LTD doesn't provide enough coverage for those higher income earners.
So if I took 3 things away from what you said, if I'm an executive or I'm a business owner, and I understand the importance of not just income protection, but adequate income protection, the 3 advantages, the first one, underwriting. So if I were to acquire disability coverage on my own and it's not through a group plan or a group chassis, I'm going to have to go through underwriting. And I'm sure we could talk about the details of that, but it's a very invasive process. The other component would be the cost, just the rule of numbers and the multi-life discount that's associated with it. And that could be significant. And there are certain advantages when dealing with an M firm or an M advisor, such as Newton One, that enhances that discount as well, along with other M producers. And the other aspect of it would be ownership. These executives own these non-cancelable contracts. Would those be the top 3? Tami, as you're looking at executive DI and what they offer business owners, is there anything I missed from what you said?
No, I think that's very accurate. I think hitting on the point of ownership. Yes, individual policies are individually owned. They're portable. So if the employee or executive leaves the company, they can take that policy with them. Unlike group insurance, that when an employee leaves, that group insurance coverage stops. The value in that, that's improving the benefits package for the organization. That can attract quality talent, and make a difference between the person coming to work for your organization or another organization. But it also helps retain that talent as well. These benefit plans are not found in all organizations. An executive disability plan is a very high quality benefit that an organization can offer.
One of the items, I wonder about, we didn't directly mention it, but the higher probability, Tami, you mentioned about an individual having a disability claim over dying prematurely during their working years. We've heard that before. So I think one of the other advantages is momentum. And what I mean by that is if these plans are offered by an employer and it's put in front of an executive and they've been meaning to execute on their own disability application with the carrier for some time now all of a sudden they have the opportunity to acquire that coverage. And just sometimes having the ease of the application and the ease of going through the process is enough to get them to move forward to put this really important coverage in place. So helping executives or highly compensated individuals secure the coverage through these programs offers them the momentum jump that sometimes is just enough to get them to take action.
I agree. I think to add on to that, when an executive would go out and purchase this coverage on their own. I mentioned the underwriting that's required, the medical underwriting, the tax returns. But evidence and statistics have shown that roughly half of the policies that get applied for on an individual basis, someone going out and purchasing it on their own, approximately 50% don't get issued as they were applied for. So that means they were either issued substandard, meaning they have exclusions or ratings because of their health history, which is the most common reason for issuing substandard, or the person was declined. So that's a high percentage of policies that don't get placed or issued other than as applied for when going out and purchasing it on their own. So the employer sponsorship alleviates all of that.
Yeah, just to put a bow on that, I guess, for any employers that are listening or any executives or highly compensated individuals that are listening, if there's an opportunity to implement an executive disability plan and avoid some of those onerous activities, medical or financial underwriting, that just makes that process more efficient. And the probability then, of course, moves from 50% to much higher. Some would argue maybe 100%.
Absolutely.
I think that's the I don't want to say selling point, but that's the most important piece of this puzzle and discussion, is having the ability to acquire non-cancelable individual disability contracts with just the stroke of a pen or a click of the button in terms of application and underwriting usage. One of the things you brought up was portability and lack thereof for the employer-sponsored long-term disability program, or we can call it the group program. Courtney, this question's directed towards you. What other misconceptions fall within the group or employer-sponsored group long-term disability program in comparison to executive disability-sponsored programs?
Sure. Yeah, no, portability is a good one. People might not realize that they can't take their coverage with them if they were to leave. I think a very large misconception is generally that their group disability insurance is enough. So is the group LTD plan sufficient to meet that 60% income replacement? A lot of times a group LTD plan won't insure bonus or commission. So that's a large chunk of someone's income that they rely on that might not be covered by the underlying group long-term disability program. Another thing, I think people don't necessarily think about taxability. So if the employer is paying for a group long-term disability plan, their benefit, if they were to go out on claim, would be taxable. So that further reduces that income protection from 60% down to whatever their tax bracket is. So, executive disability programs, I think one of the biggest misconceptions there is just it's so difficult to enroll and time consuming. So the people at an organization responsible for administering that plan are just less incentivized to do it because they think it's going to take too long and it's going to be too difficult. But as Tami discussed quite a bit, with a multi-life plan through an organization, the administration of that plan is just so streamlined, especially nowadays. Carriers have made really great progress in streamlining that process to make it as easy as possible for the business as well as producers who are, helping with that administration. There's no medical questions. Sometimes there's not even an application required, depending on the type of plan that's enrolled. Financial verifications, much simpler, so no complicated tax history. If it's through an employer, typically you just need, a census and what the employer says their financials are. So much less complicated, I would argue, for administering the plan. So I would encourage anyone who's thinking about this type of plan for the organization not to be overwhelmed by the process, because it's just so much simpler these days. And then my last point I would say is just I think people think IDI plans, executive IDI plans are just too expensive, too cost prohibitive. But again, with the multi-life plan, if you can get a group of people on the plan, you're going to have access to multi-life discounts. And that's just not available on a single life basis. there's also a lot of flexibility with how you fund the plan. And while we most often see an employer funding the plan, there's ways to split the funding with the employee or have a pure voluntary employee funded plan. So there's a few ways that you can address that cost prohibitive misconception there.
I think they're all great points. And one of them, I'll jump back to the cost, your last point in terms of expense. And when we get involved with engagements around executive disability and we're at we'll say the 10 or 5 yard line and we're illustrating the final quotes for the group or tranche of executives, when we really dial it down to the annual cost of premiums over the 20, 30, 40 partners at a firm or executives at a business, the cost in comparison to the total covered payroll when looking at the entire benefits portfolio, it's traditionally less than 1%. So if you can take the premium allocation and just shift it from what you're potentially paying within a benefits program and shift that towards an executive disability program, and it costs less than 1% of what's already being funded, or maybe it's an additional 1% of what you have to allocate in order to adequately insure that group of individuals to Tami's point, 60, 65, 75%. If you understand what you're providing from an income protection and they see value in that, usually that 1%, Steve and I say this sometimes, it tends to be a no-brainer to allocate those funds to a program such as that. So cost is definitely a concern, but when pen goes to paper and you can actually see what you're getting in regards to what you're paying for, it's a very small piece of the entire benefits portfolio. You brought up funding structures. How, if I'm a managing partner at a law firm or I'm a business owner and I'm ready to pull the trigger on a carve out that they've worked with ourselves and the team with M Financial, what are ways they can fund the program? We talked about employer-sponsored programs being employer-funded. How can we fund executive disability insurance programs? And that can go to Courtney or Tami, whoever wants to answer.
I'll start, and then Tami, if you feel like I have any gaps, feel free to jump in. But the most common plan that we do see, and the easiest way to enroll the plan is what we call an employer-funded or a mandatory plan. If it's mandatory, it doesn't necessarily matter who's paying for the coverage as long as everybody is participating in that plan. But typically, when it's mandatory, it's going to be employer-funded. And that's going to get you the highest discounts, typically the highest levels of guaranteed standard issue. So what a monthly benefit you can get that requires no medical questions. Another way would just to be to have the employee pay for it. That's going to require a lot larger of an eligibility group. So we're going to need, 50 to 100 lives in an eligible population to make that a purely voluntary case, so no employer contribution there. And then another way would be to share the cost with the employee. And one of the most common ways we do that is by the employer sponsoring a small benefit, so maybe $1,000 to $2,500 per month of a base. So the employer is funding that, and then there's an option for employees to buy up additional coverage that they would pay for. So that's a way to share the cost with employees. We do require a little bit of a larger eligibility group with that, whereas a mandatory plan or 100% employer funded, we typically can go down to 3 to 5 lives in an eligibility group. Tami, do you have anything to add?
Well, Tami, I would assume there's tax implications depending on which funding structure you decide to move with as well. Is that correct?
Yes, that is. So the mandatory plans that Courtney talked about, those are typically employer paid, mandatory. The employer is paying the premium. The benefits are taxable when received by the employee. If the employee is paying the premium, then the benefits are tax-free. That split funding is going to be whatever portion the employer is paying for, that's the portion that's going to be taxable, and whatever the portion the employee is paying for, that's the portion that's going to be tax-free. And we're talking about guaranteed issue plans. When we're talking about executive disability programs, it's how much coverage can we obtain on a guaranteed standard issue basis.
I'm a huge fan, and we've had success in those combined employer-funded or mandatory and voluntary component, because then you receive buy-in from the employer. There's a mandatory component that's funded by the firm, but to Steve's point earlier in terms of generating action or kickstarting the process, there's an application that's sent out stating your firm sees value in this program. They're paying for the first $5,000 of coverage. This in turn allows you to buy up an extra $10,000 in coverage on a voluntary basis. And it has the application in front of them right there. And then when the lawyer or manager or business owner can see what that actual cost is for obtaining additional coverage on an individual basis and understanding that they're just checking a box to acquire it, the participation percentages tend to be a lot higher than having a true voluntary offering going out.
Tami, you deal with all of the elite disability carriers in the industry. Some of those companies may have changed over the last couple of years of our careers. Maybe not. Do we want to mention any carriers that stand out as really being committed to this marketplace? Maybe at a higher level than that, what I'd be curious about is, are you seeing any trends? Are new carriers coming into the business? Are there new contractual provisions? Is the pricing staying stable? I know I'm throwing a lot out there, but kind of think through from a higher end what you're seeing, and then maybe talk a little bit about or share with us the carriers that you're seeing that are really committed to this marketplace.
Yeah, so the carriers that we're seeing that are committed to the GSI marketplace, the executive disability marketplace, are really looking for new and better ways to implement these programs. They're looking to enroll without applications. So, they get a census of employees and they can enroll and issue policies based on that census. There are no applications or client signatures. So that's a big trend right now, is carriers are looking for ways to make the implementation process easier. Some carriers have come out with newer products to be more competitive. They're coming out with better priced products. So it's not only the features have kind of stayed relatively similar. The new bells and whistles that the marketing that might come out with some products really hasn't gained a whole lot of traction. It's more the base, the foundation benefit features of a policy that really make the difference. And that's, the definition of disability, the return to work features, catastrophic illness riders. Those are what people find the most value in. As far as the carriers in the industry, Unum has maintained its position as the market leader in years. I can't even recall how many years, but it's been probably my entire working career. So it's been a long time. They've held that market position in multi-life disability, executive disability plans. They are the market leader. The next is Principal. Principal is committed to the GSI marketplace. Standard is also committed, and Guardian and Mass Mutual. Those are the top 5 carriers in the industry, and has partnerships with a few of them.
That's great. Courtney, is there anything you've seen from a plan design beyond what Tami's mentioned that has become attractive? Are there certain things that are just must-haves, and then others that are maybe nice-to-haves in terms of the plan design?
Yeah, I would say first, thinking about the benefit period, as people retire later, a longer benefit duration is appealing. 2 age 67 is pretty common, which aligns well with Social Security retirement age now. But we are seeing people, especially like lawyers, medical professions, really like the longer benefit periods. We can go up to 2 age 70. And that's been really ideal for those occupations where they kind of plan on working a little bit longer than maybe other forms of occupations. Tami mentioned the definition of disability. Some carriers offer an enhanced definition of disability for those really highly specialized occupations like the medical, the legal. And then I would say recently a big one is as a result of the COVID-19 pandemic and social awareness around mental health and conditions related to mental health. So what we would call mental nervous benefits. Typically on a group long-term disability plan, any claim related to mental nervous is going to be limited to 2 years. But, now that people are more aware of these mental health issues, and since COVID-19, there has been an uptick in group short-term disability, group long-term disability claims in this area. And if you're not necessarily sure what mental nervous claims would be around, do you think depression, anxiety, bipolar disorder, schizophrenia? So claims of that nature have really increased. So with executive disability insurance, you can extend out those benefits. So you can limit it to 24 months or 2 years for a discount. But we really recommend elongating that benefit duration because typically claims related to mental nervous last at least 5 years. So typically we'll encourage at least, of that length if possible or for the full benefit duration. And then another contractual feature that I really, advocate for is called a serious illness or a supplemental health benefit. And that pays an additional benefit for certain medical conditions like cancer, which, by the way, it's the second highest LTD claim. And then it also pays benefits for other medical conditions like bypass surgery. And I think I'm missing something, Tami, but so serious medical conditions. So I definitely try to advocate for that if folks are, interested in that kind of plan feature.
Those are really good points, and educating clients on those claims, especially after COVID. I would say, I think you hit the nail on the head, the perception of anxiety and depression and how that's handled from an employer standpoint, the individual out on claim, as well as the carrier. And understanding that the group contracts do have limitations, as you said, Courtney, 24 months or 2 years, having the ability to extend that. And is it appropriate? And is it a value add to the employer to extend that as well, and understanding what they're getting for that additional cost has become a huge part of our practice when we get involved in the executive disability engagements with mostly law firms. So.
Yeah, and I also wonder, if you're an existing employer with a plan, you've put a plan in place, how should you evaluate whether the plan is successful? And that might also relate to whether it's employer paid and mandated versus a voluntary plan. If you're sitting here listening to this and thinking, we have this for our firm and it's a voluntary plan, but we only have 10% of the population that have enrolled. Is that successful? Is that not successful? Certainly it is for the 10% that have enrolled, but if you're an employer, how would you evaluate whether the plan that you've put into place, beyond contractual provisions is competitive and maybe fulfilling the needs of your workforce?
The carriers that we work with typically expect 20 to 30% participation in those voluntary guaranteed standard issued plans. So, that's how an employer could look at, how successful is it? Am I communicating the value of this coverage to our employees adequately to get them interested in purchasing it? If participation is low, say the 10%, maybe the communication about the value of it isn't hitting the mark. And maybe the employers can offer more commitment to that communication, really back the message of that coverage and conveying that it's important and why it's important to the employees.
To leave the end users, if you will, business owners, managing partners of law firms, what should they look at? If you could give them 2 or 3 things when they're doing their year-end review of their benefits offered to their employees, what should be the things they look at when they review their group long-term disability program?
Well, they should be reviewing it annually. They should be, if they implement a plan, they should be looking to ensure that all who are eligible are participating or have been given the opportunity to participate, and making sure that the integrity of the plan that was put in place is still there. Are the benefit levels enough to get our key employees up to that 60 or 65% after-tax benefit? If it's not, then they can renegotiate with the carrier to provide an additional benefit, hopefully on a guaranteed issue basis. They're really doing a service to their employees if they can maintain the integrity of the plan that was put in place, and it should be reviewed annually. And with guaranteed issue programs, there's a built-in feature that as earnings go up for a key executive, the amount of coverage available to them on a guaranteed basis goes up as well. So they can increase their monthly benefit up to the maximum of the guaranteed standard issue offer of the plan. And that can be done on an annual basis. So it's really important that annual increases and reviews are done.
And the reviews, and if there is no executive disability program and they're just looking at group LTD, the group long-term disability plan, your team, along with us at Newton One, there's analysis and income protection reviews that we can perform or create to show if there are potential gaps. And that's something that I think visually stands out when you see how many individuals or executives are underinsured from an income protection standpoint. Is there anything else we missed, or is there anything else you want to elaborate on before we go into our fun questions, I'll put them as, to conclude our podcast?
I don't think so. I think we covered quite a bit.
No, I think you guys hit the nail on the head. I'll start with you, Tami. You've been chosen to represent your country in a global competition. What sport or activity are you doing?
Well, I would probably say ping pong. I love ping pong. I grew up playing ping pong. I'm not any good at it anymore, so I'd have to get a lot better. But they are complete athletes. I mean, the way they move back and forth, I would love to be able to do that. So I'd have to train a lot, but and maybe about 40 years younger. But
oh, next time we're in Portland, I know who my ping pong partner is.
Awesome.
Courtney, you don't have to sleep. What are you doing with your extra time?
That's a funny question because I actually really look forward to sleeping.
I was going to say with baby
every night.
With Dorothy now, right? Is she keeping you up?
Yes. Yeah. 2 young kids. My sleep is I'm lacking in quite a bit of sleep. So anytime I can get in bed and just close my eyes, I'm really looking forward to that. But if I didn't have to sleep or want to sleep, would be the better question. I think I'd use that time to exercise, honestly. I should probably choose it to read or something, but I like exercising, and finding enough time to do as much as I want right now during this time in my life is just not as much as I would like to. So I would just choose to exercise.
I love it. I would do the same. Thank you both for joining us and sharing some time and your expertise in this field. We look forward to having you on again. Tami Barraclough and Courtney Russell with M Financial.
Thank you for having us.
Bye. Goodbye.
The material and opinions voiced are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine what is appropriate for you, please contact a member of our team.